Morning, everybody. 20th of May. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare and Ian Coleman. Morning, gents.
Morning all.
Good morning.
How are
On
we
this
on this
lovely
fine
morning.
day?
Fine
Cracking
day.
out there,
Beautiful,
isn't
isn't
it?
Yeah, humdinger.
Get this out of the way and I'll go and sit in the garden for the rest of the day.
Yeah, you like normal, yeah.
Exactly that. Okay, so what's going on in the markets? It's been pretty volatile, hasn't it, the last few hours and into the close last night?
Yeah,
It was a funny one last night, wasn't it?
I think
Like
it
a
was.
big turnaround.
It was all to do with the Moderna. Is it the coronavirus drug trial?
Yeah,
It's fallen on its arse, or is
So
it
I
close
think the
to
markets
falling
are
on
going
its
to be
arse?
particularly receptive to these kind of rumours, aren't they, in the coming weeks and months? I mean, was it phase one or something? I mean, that's nothing. It has to go through quite a lot of hoops before it gets anywhere near becoming a viable option. I think 90% or more of phase
Yeah,
one drugs fail. So the market's certainly getting ahead of itself on things
but
like
don't we
that.
just take what Trump's taking and what we've sorted, wouldn't we?
Just stick some Dettol in your veins.
hydroxychloroquine.
Yeah.
Oh, he's been
Well,
practicing.
he's been using it for the
practicing.
last 3 days and he's had no symptoms of coronavirus, so it must be good.
Yeah,
Must work then.
yeah, defo.
Egypt. Okay, so Ian, do you want to take over and have a look at some
Yeah.
FX for us?
Let's talk a little bit of news first. So the German headline ZEW Economic Sentiment Index strengthened to 51
I know,
from
what was that?
28.2. I mean, it was 30 above consensus, the strongest reading since April 2015.
Where'd that come from?
Fuck knows. I think they made it up just
Yeah.
to give the euro a bit of a boost. And then in the same session, and this is the European morning session, we had the Bank of Japan announce that it was going to hold an unscheduled policy meeting on the 22nd of May. And they're talking about all those rumours about different funding options for different financial institutions and basically chucking a bit more at it. So
Wiped to our yen positions yesterday, didn't it?
yes, so we had a disastrous day on yen, and of course on the back of that, the main beneficiary, if you like, of that euro strength and yen weakness was euro yen, which is the chart that we got on the screen. So it has headed up, but as we've just been saying, stock indices look a little bit weak, and I think it could be time for risk off again. And as I was saying yesterday, I still think the euro looks overcooked in quite a few baskets. Now this morning, we've had UK figures out again, inflationary figures. They've been diabolical. So we are starting to see a bit of a move to the downside. Get rid of that, it's the wrong one. In cable, so we've had 2 days of net gains. Our bespoke resistance is actually 122.80, and then we're just starting to see a move to the downside. And conversely, if we go to this time frame, that's the wrong one. I want euro sterling. Conversely, we are seeing a move to the upside in euro sterling this morning, but there's plenty of upside barriers. 89.72 is a trendline resistance. 89.88 is a 38.2% pullback level. If we do look at the euro, and again I got the wrong chart there. Where's this one? We've got a 161.8% fib here, and we just tried to get into a small rally this morning, and it looks like we've probably missed it. So we have bespoke resistance located at 109.64. So as far as I'm concerned, this sort of move higher on the back of that ZEW sentiment is a bit of a false rally, and I think euro bears are going to return and push it lower. With regards to the dollar index, which chart do I want for this one? It's still just consolidating. I mean, how many days of consolidation have we had really? 37 days, that's trading days. So what's that, a month and a half? If you put an RSI on here.
It's almost 2 months if you just take working days into account, I suppose, isn't it?
Yeah. It's just, if it trades around the 50 level, it basically indicates that it's non-trending. So all the way from the start of this potential flag or triangle formation, the dollar index has been non-trending, which means high volatility in intraday sort of dollar-based charts, making more excuses. So yeah, I mean, probably looking for this to continue. We've got the FOMC minutes tonight at 7 o'clock, so hopefully we'll get some sort of direction from there. But that's it.
Okay, cool. Steve, you ready?
Yeah, I can go. Initially looking at oil, we had quite a quiet day in relative terms in oil yesterday. Obviously, we had this decent rally up, especially from the consolidation around these levels, around the $26 level. Had the push up, and we're sort of in a intraday triangle once more. Ooh, why'd that one do that? I want to see this one. Intraday triangle again. We had the triangle last time, broke up. Another triangle formation forming here. So we got all inventories out today. I'm looking for the figure. I think it's about 3.5 million fall in inventories. Are they looking for? Or maybe someone else can look at that. So I'm still mildly positive in oil, and maybe if we do get some sort of surprise, this trade idea might work that we put on the intraday chart, looking to buy around support just around the $30 level.
They're looking for a build in oil.
Oh, are they?
Yeah, 0.967 million. And it was last minus 0.745 million.
I'm looking at DOE gasoline inventories, negative 3.5 million.
That's on FX Street, but
right. The oil change in barrels is expected a build of 0.967. Yeah. I was looking at the gasoline inventories. Excuse me. And copper still in this upward trending channel. Going back to the 19th of March, that's looking pretty good. We're in a bit of this obviously reverse head and shoulders formation played out really nicely. We've had a bit of a pullback, and this is forming a bit of a bullish flag, I think, methinks. So again, looking to buy a few dips after yesterday's sort of sideways price action. Gold had a really good day yesterday. We've obviously highlighted this shooting star type formation, and this needs to be shooting star candle, and for the formation to be confirmed, it needs a bearish day. Yesterday didn't happen. The dip was bought in front of 1725, which was a key support level. We were looking to celebrate just below that. It didn't happen, so prices have moved up overnight as well. So look, I think we're looking to challenge this $1765 area again. On the hourly chart, we've got a small potential uptrend line forming here, 2 points, looking for the third to form, looking to buy a dip there. Silver performed really well as well. So we've even got silver moving, already sort of got back above this. So it's a pretty decent resistance at $17.55 to 60. That's the area to look for. A break above there. Let's get rid of this red arrow, just might put people off. A break above here, and we should extend further and move towards the $19 level potentially. Other really oil, really looking at the coronavirus pandemic, whether there's another second spike, it'll put it under pressure. If there's not, then the oil cuts might factor in, and we could still move higher. And because the euphoria over the potential COVID-19 vaccine fizzled out, gold returned and is on an upward march again.
Thanks, Steve. Very nice. Okay, so indices, as we touched upon, they did sell off yesterday from the highs that they reached. There was a big spike up on the open from the FTSE 100 into a 78.6 and the underside of this channel, at which point the bears stepped in and sold it off. I think that was probably on the realisation that the initial hopes over the vaccine were probably a long way off, and therefore we saw some selling action take place. Some nice selling off into the close and towards around about 11 o'clock when we saw a turnaround. I guess that's when the Asian session started to really sort of get into full swing, and we have seen a little bit of an uplift today. But over the last few hours, it's been particularly choppy price action. And in terms of where next, I still think the bias is to the downside, so expect some more choppy action in the very short term. On the DAX, it's a similar situation. That did overextend to an 88.6% level on the fibs, and also a resistance level that we posted there. So hit that one really nicely, and again sold off into the close, but is looking particularly choppy again in the first few hours of trade. In the US, we have got some choppy price action on the Nasdaq. It did break above this previous high that we saw on the 12th of May. But price action looks to be a little bit choppy. Potential for a bit of a double top forming there on the Nasdaq if it breaks below this low here at 92.78, and then we could see a retreat down to sort of 91.60 potentially on the intraday charts. The last one I wanted to show is the S&P 500. Yesterday, this broke above the highs that we saw on the 30th of April for a very short period of time. That was when the European indices topped out as well, potentially triggering some stops and creating a false breakout there before then selling off. And that doesn't look particularly great. We are trending lower in the very short term, so I think there's potential there for a little bit of a dip as well, and a potential for a risk-off move today. So we'll see how that goes. But we're looking to sell indices today a bit higher up. Not sure whether or not they'll get there, but we've got the limits in place, and let's see what happens. Okay, so gun to the head next. Let's just get the spreadsheet up. I got buried on New Zealand dollar, Japanese yen, just because of that surprise Bank of Japan meeting that was set up, and that meant I was stopped out for a 1 hour loss. Steve, you had 2 wins on the bounce on copper for a 0.41 win at the close at 9 o'clock. And Ian, you had a nice win of 0.83R on euro sterling. So overall, we managed to put in a positive day again yesterday.
I hope everyone was sitting down when you said I had 2 wins on the trot.
Yeah.
That could have caused accidents all over the country.
Possibly. So overall, P&L looking fantastic. Ian, you are closing the gap.
Creeping up.
And Stevie, you've made a new high as well, I think, on your P&L. So congratulations.
Get in there.
Let's keep this ball rolling, shall we? Who's got a trade idea for us today?
I've got loads of trade ideas.
Go on in.
Don't even get me started.
There's that confidence. You've got the screen.
Oh, oops.
Not that
I was
one.
only joking, obviously. Not that one. No, I've got nothing.
All right, Ian, you must have
I'll have to.
Right,
Oh,
yeah,
look at Ian.
I know. I don't know. Yeah, I just was interested in this. This is silver and gold overlay chart, and it's quite interesting that sort of from the beginning of 2020 we had that massive sort of gap. So sort of, yeah, the silver sold off a hell of a lot more than gold did, and then we've seen this rally back. And if you look just from about here, which is the 4th of May, you had a massive, well, in comparison, a massive move higher in silver compared to gold. And in fact, from the base, silver's rallied 47%, whereas gold has actually only rallied 19%. And it's quite interesting because Palomine is actually, he's involved in gold and silver, and he keeps on cashing in this and buying this. So he must be doing quite well on that correlation. So they do have a tendency to move back together.
There is a chart. I don't know if you want me to quickly show it on. Just hijack your screen. This is the gold-silver ratio.
Oh, okay.
So this is gold price divided by the silver price. So you can see, obviously, when it's been trending lower, that's been gold actually underperforming silver. Is that right?
Yeah.
So you see that nice little tick up there. This is only an hourly chart. Let's have a look at it.
Yeah, exactly. Well, I mentioned this a few weeks ago. How gold against silver when we were down at. Let's get the silver chart up. I don't need it. But
big spike up. Obviously, gold outperforming when we saw the crash take place.
Yeah.
So you've seen that big move to the upside where gold outperformed, and then as obviously there's been more appetite for risk in this period, we've seen gold underperform and now retrace a lot of that move. Potentially, we are going to see a shift back to gold.
Well, that high that you're showing on the chart is the biggest ever correlation difference between gold and silver ever in history since man began.
Right.
You'll never get it higher.
Okay.
Even doesn't matter how many pages you've got.
All right. I haven't got enough. Clearly.
No, I read about it the other week, and I mentioned it on Talking Bull. It's basically normally you'll get it trading around about the sort of like historical average is around about 40, 50 times higher than gold. Will trade higher than silver, and we peaked out around about 120 times, and that was at the day it happened. We actually said that's the most it's ever been. That's the cheapest silver's ever been compared to gold.
Okay, so we'll be looking for that to turn in. Are we saying around here potentially?
Well, it's still. I mean, if you're thinking
It's a decent
historically,
downtrend, isn't it?
yeah, I mean, it's way overvalued compared to silver. So, you know, like you say, keep doing that divergence chart. It'll revert back to the mean.
Yeah. Okay, Ian. So
Put
sorry for
your hands on it.
hijacking that, mate.
It's all right. I'm still, if it's not broken and all that malarkey, so I don't need to talk about it really because I talked about it yesterday. Euro sterling. I'm just going to go for that with a nice stop just above there. So 87, 89.50, 87.55. I might round that up to 300. So going short at 89.50, stop at 89.80, targeting 87.55. I'm sticking with it. Euro sterling, can see no reason why I wouldn't want to be short of it.
Okay. Good luck, Steve. You ready? Do you want me to?
No, you go, mate. You go.
Okay.
I'll have to dive into equity indices, I think, Joe. Sorry about that.
Thinking that if there's going to be a move to risk off today, then we're going to see some strengthening in the US dollar as a result of that. Looking at the dollar index, it's had a move down, potentially consolidating around here before another move up, maybe. Obviously, we have to wait and see. So I'm really looking to sell currencies against the US dollar. I think are the weakest. Now, Aussie dollar and New Zealand dollar have had some pretty mega runs against the US dollar in the last couple of days. That huge move up. New Zealand dollar is slammed into a 78.6% level and seems to be forming some reversal candles on the approach to that. And I think that it remains the weakest of the currencies overall on a longer term basis, and therefore I want to be selling New Zealand dollar against the US dollar today, and I expect a move lower. I'm not sure whether it's going to get all the way down here, but you've got to be in it to win it, as we say.
Easter.
Very clever.
It hasn't worked for me last couple of days. So I'm selling at 60.89 or 60.90, and I've got stop loss at 61.22. And I'm going to target a move down to 59.20 on that today.
Good
Looking
luck.
for a risk off move. Okay, Steve.
Yeah, I'm still not sure.
And maybe close it at 7 o'clock before FOMC.
Yeah, well, that's the risk
Can't
we
do it.
take, unfortunately.
Not right.
Not allowed.
Not
Okay.
allowed.
I'm just going for a bit of a punt, really.
Nikkei.
Yeah, why not?
Why not?
Someone said stocks might go down today. I think that's all I heard from you. It's a bit of a blur.
I've been saying that for ages.
Yeah.
I'm going to, as you like those apples, I'm going to get short here at 20,575. My stop is going to be a break above these highs.
Yeah.
So it's a pretty decent risk reward trade. Only looking for a pullback. Let's see what them fibs are all wrong because they were drawn.
Wrong way round.
No, they were drawn from. Let's see where the. Yeah.
Oh, hello. It's already
Oh,
there.
hello.
It's like by magic, you knew it was there.
Maybe. I'll go for the 61.8. Be a bit greedy because look, if we extend this line down here.
I like it.
Some voodoo shit you got going on there.
0.25. 4.4. Oh no, that's just too much, isn't it?
That's lovely.
We'll go 0.50. Yeah, 4.2. Yeah, 20,050 I'm targeting. Stop at 20,700 and selling here 20,575.
Great, good luck. Okay, so news-wise and sort of what to expect from the day ahead, we did touch upon a few bits. Ian, you said that the
UK figures
were out this morning.
Crap.
Dropped sharply to 0.8. The UK inflation, almost halving from the 1.5 reading in April. This is largely down to the decline in both gas, household costs, and also fuel. The impact of energy prices on inflation is highlighted perfectly by the fact that the core CPI moved only moderately lower to 1.4% from 1.6%. We also talked about the German ZEW Economic Sentiment Index yesterday, which strengthened to a whopping 51.8 from 28.2 in April. So a little bit unsure as to how that number's come about, but that's what it says. And we've got Chairman Powell continuing to push for more stimulus, which I guess is going to continue to provide a bit of a backstop to equities and risk assets for the foreseeable, while he continues to talk about that. Data-wise today, we've got Canadian CPI at 1:30. Then we've got crude inventories, as we touched upon, at 3:30. And then following that, we have the FOMC meeting at 7 p.m. And they're going to cover decisions made at the last meeting. And I guess there'll be further talks of we'll do whatever is necessary, etc., etc.
We've also got consumer confidence at the Eurozone at 2 o'clock. I know it's not normally a big figure, but people are sort of, I don't know why, Bloomberg are talking about it. Minus 24 is expected.
Right. Keep an eye on that then. So potential for there to be some decent movement today in markets. Good luck if you're trading. We can wrap it up there, I guess, and we'll catch you all tomorrow.
European holiday tomorrow, isn't it?
Is it?
Ascension
We've got
Day?
one on Monday, haven't we?
Yeah. Ascension Day tomorrow.
Right, okay. They just make them up as they go along, these holidays, don't they?
But there's still figures out, so maybe I'm just talking bollocks.
Well,
Anyway.
you're definitely talking bull, mate.
Talking bull.
Okay.
Right.
All right, guys.
Right.
Have a great day. Good luck with your trades. Catch you tomorrow.
Cheers.
Grab the factor 50.
Bye-bye.